Okay, today we're looking at the pound US dollar. It's one of my favorite pairs to trade. I trade Forex alongside one or two other instruments, and the pound US dollar is a great one to trade. So what you can see here is we've already had a completed trade. I just wanted to give you a little bit of background on this one. So you can see here there's been a divergence with the PowerDelta. There was a sweep of liquidity. This is provided by the Sigma 4-in-1. So liquidity sweep divergence. There's been a reversal print. So these dots and this arrow, reversal print, which led to actually three fair value gaps forming. And you have to take the last one. You've got to make it weigh up whether there's still a good risk to reward between where your stop is going to be set and the either a 2-to-1, 3-to-1, or the next liquidity level. In this case, it's the next liquidity level is the target. It offers a 2.6-to-1 trade. The stop was placed just below this thin fair value gap. You could arguably make it a little tighter if you wanted to, so it's just below the second one. If price were to reverse or inverse two fair value gaps, then you would know the trade was over. A couple of things I wanted to draw your attention to. You can see here there's actually some reverse signals, and there's been an upgrade to the 4-in-1. Some additional filters have been added. So first one, opening gap filter. You'll see here that was actually a signal created by an opening gap. It can sometimes create false signals. So by enabling this, it cuts those out. We've also got a volume filter now with a volume threshold of 1 to 10. Default is 4, and that actually took out this other false signal. There's low volume. So the reason it's not a valid signal in this case is because the volume was too low. We knew there was going to be no follow through, so it immediately takes that symbol out of the equation. Sorry, takes that signal out of the equation. There's also a price filter, which we'll look at in a little bit. I'll just uncheck the volume filter for now. So you can see here that another signal has been painted, this time to the downside. So is there a reversal taking place here? Well, let's take a look at what's going on. If you're to draw on this line here, you'll see that there is ever such a slight divergence with the manipulation ribbon. This shows you where price should be and where it's being held, and if it's being manipulated by the market makers. There isn't a divergence on the PowerDelta this time. However, if you see here, this thick red line, that is the daily liquidity. That is sitting directly above this was actually a 4-hour liquidity line. That's always going to be the stronger draw. And you can see, had we stayed in this original buy trade, it does actually go up to the daily liquidity. So we could have actually placed our take profit there, and there's a good chance it would have struck. However, I'm a little bit more cautious. If I'm getting anywhere between a 2 and a 3-to-1, somewhere a little bit safer, I'll always take that. So the reason that this is not a valid sell side signal is because there is this daily liquidity sitting directly above it. We can't expect price to drop when there's a target sitting directly above it. You've got to wait for clear space, like we had down here, clear space all the way up. So that negated that particular signal. You'll also notice there's no fair value gap to the downside either. So we wouldn't have got in anyway, and then price would have come up and another reversal signal would have started painting. If we just play this through, let's see what happens when we get a next signal. Okay, so this is now painted to the downside. If we draw this on, is this a valid top edge? You can see here, looking at the manipulation ribbon, that has actually gone to the upside. Let's just zoom in a little bit here. This has gone to the upside. This has gone to the downside. We can now mark out a short position. We can put a stop here. The natural, just looking at these lower lows, where these targets might be, that's a 2.72 to 1. Good chance it may go beyond that, but let's just see how this plays out. Price dropping away nicely to the downside. And we can see this huge candle to the downside. You might get a little frustrated if you're actually in this trade thinking, man, I could have taken it all the way down to the dots, which case you'd have had a 10 to 1 trade. As I say, I'm not the greediest of traders. If I see a 2 to 3 to 1, I'm happy with that. Now, before this morning candle, this was the London Open, 8 a.m. UK time. You can actually see here, there's been an arrow to the upside. Now, earlier, I showed you the volume filter. If we'd have actually had that on, there wasn't enough volume. So it would have negated that and we made it a full signal. You can see it's ripping to the downside here. There's another reversal print starting to come in here. What else can you see? You can also see that daily liquidity, 2 levels in fact, have been swept. So there's a good chance of a reversal here. Let's see what happens. Trade to the upside. Now, there's been a huge divergence. Let's see what happens. Another signal. Another reversal print signal. Now, price does not seem to be moving. So there's a few things I'd like to explain here. Let me just zoom in. First things first, you'll notice I didn't take that signal. The reason being, I had actually enabled the price filter. And you can see with the price filter enabled, this is invalidated. So in that case, no signal to take. This next one, this next reversal print, because we've had this upwards move followed by a downwards move, it's actually invalidated this liquidity sweep. Plus we have a good number of candles since the sweep, almost 40 candles since the sweep. So no new sweep. You're kind of in no man's land here. So in this situation, do not take the trade. Also, the other thing I wanted to point out, you can see the manipulation ribbon here. If you look at the difference between those 2 highs and these 2 highs, you'll see a huge divergence. Now, what this is telling you is price should, in fact, be up here. However, the market makers are pinning it down. They are desperately holding it down because they want to push price back down. They're not ready for it to go yet. If we keep looking at how this pans out, there's another reversal signal, reversal print. Again, there's been no sweep. Ideally, you want to be looking at this level. This is the 4-hour liquidity, and you want to see that swept. So again, you're in no man's land, and there's a print. Even though you've got a tapering off here on the PowerDelta. PowerDelta shows a combination of volume and price. You'll see that, yes, there is a divergence, but there's no sweep. So we can't call that a valid signal. You have to have everything in place. Right, now look at this candle. It has swept this liquidity. This, if you're looking closely, you'll see that there's a slightly grayed out block on the chart. This shows the previous 60 candles. Now, when I take a trade, I want to know that the liquidity that is being swept, has sat for more than 60 candles, which in this case, it has done. So that's the first confluence with the sweep. Is there a reversal print? Yes, there is. Is there a divergence? In this case, yes, there is a divergence. Is there a fair value gap? Yes. In fact, there's two. So we're going to put a limit order at the top of the second fair value gap. We are going to put our stop underneath the candle which precedes the first fair value gap. Now, in terms of target, there is low-hanging fruit. You'll see that there's a pivot here. I'm just going to refine my stop, purely because if there are two fair value gaps, then you don't have to use the full candle body length. You can place it underneath the second fair value gap. That's fine. That gives us a 2.34. You know, some more conservative traders, may put their stop at the swing low. I like to take on a little bit more risk, and I'm happy if there's at least two fair value gaps. I'm getting anything between 2 and 3, 2.29. You could also target, there's a fair value gap here, a very thin one, or a more obvious target might be this second fair value gap there, whichever suits you best. Let's see how this trade plays out. So we would have been tapped in here. Another fair value gap has formed. Positive sign. It seems to be reacting off all the fair value gaps that are being formed. And there we have it. Target hit 2.86 to 1. It's a good day's trading. Any day that involves a trade of anywhere between 2 and 3 to 1 is a good day. Even if you're to lose, you could afford to lose 2 other trades and you'd still be in profit for the day. So it really is a great system using the Sigma 4-in-1, which comprises of the background liquidity checker, the 4-hour, or in this case it's the 4-hour, and the daily liquidity. You can set it to any higher time frame you wish. If you're on the 5-minute, for instance, you could potentially set the hourly, the 4-hourly, and the daily. You can have up to three different time frames set. You have the reversal print, and you have the fair value gap detector. All come with alerts. So reversal print can be alerted when the warning dot starts, and then when there's a break, you can be alerted when there's a fair value gap formed and when one is tapped. You can set alerts for a liquidity sweep. Those have to be set manually against the points that it's highlighting. You also, within the package, get the PowerDelta oscillator. Very powerful oscillator, far more accurate than anything like the RSI or or any other oscillators that you may know about. It's a true delta involving volume and price, and then you have the manipulation ribbon, which shows what the market makers are doing, where they're holding price, where they're pushing price to. This is not just price being held, it's also where manipulations are occurring. So the suite really is the pack of indicators really is good value for money, and it really can turn your trading around. All available at fxscripts.app.